right, welcome back to eXp Realty Minnesota. I'm your host today, Justin Campbell. And in today's video, we're going to take a look at what's happening in the Twin City real estate market and also get a little bit of information to find out what's happening with the current mortgage rates. I'm bringing on a great guest, Brett Reinhardt over at Fairway Independent Mortgage.
Oliver White Group at Fairway Mortgage.
All right. Well, the big question that my clients always have and customers always have is what the hell's going on with the rates? You know, it's Monday.
Yeah.
And so what happened over the weekend and where are we at on rates today?
Yeah, absolutely. Great question. I mean, obviously last week was a short week with, Thanksgiving. So a day and a half, markets weren't even open. And so we did see rates come down a little bit at in the middle of last week. Today, I've seen rates stay around the same. It started off a little bit worse, started to get a little bit better. It is an important week. We got a lot of jobs numbers, unemployment numbers coming out this week, which can absolutely affect rates one way or the other. There's a lot of optimism that it's going to actually help rates this week. And so, I think right now, we might be sitting high sixes, low sevens, somewhere around that point. But hopefully, if we get some good news, stack some good days together, we could be sitting pretty easily in the mid sixes by the end of the week. Hopefully, and that's obviously an optimistic view of it. If we can be sitting in the mid to high sixes consistently, I think by the end of the week, then I think we'll still be happy. So.
Awesome. Great information there. So why don't we preface this, where were we the same time last year as far as rates?
Yeah, great question. I mean, this time last year, we were probably sitting a little bit higher than where we were now. I mean, I would say October of last year was the highest we'd seen in rates in, probably 20 something years. We were around 8%. November, December, things started to come down. We started to see things in the low sevens, roughly, probably around this time, and high sixes started to maybe by the end of the month of December. And then obviously this year, we started to see some mid high sixes beginning of the year, went back up to about 7 and kind of fluctuated up and down all year. And so I would say roughly around the same point, a little bit higher though than where we are right now. And so year over year, my guess would be we'd probably be about 0.25% lower, maybe a little bit more than that.
So you kind of mentioned that going into December that the rates did tick down. Is this something that's kind of connected to this data that gets released from the Fed with the jobs data and stuff? Is it connected to that? Is that how the rates are directly impacted to?
Yeah, absolutely. I mean, realistically, a lot of people see the Fed is saying, hey, we're going to cut rates 0.5%, we're going to cut rates 0.25%. And think that's what's directly correlating to the mortgage rates. And those aren't necessarily directly correlated. So those are more car interest rates, HELOCs, stuff like that. But the fixed interest rates of the 30-year fixed interest rates, which is obviously kind of what people base it off a lot of the time. Those are based off of market data where obviously jobs, inflation numbers, a lot of these items are really the main factor in affecting interest rates. And I think if we, truthfully, it's kind of almost a little bit backwards sometimes where, I think in reality, mortgage rates are almost looking to see, if unemployment, for example, goes up a little bit, I think mortgage rates will actually get a little bit better, just because I think in reality, the markets are going to see that as, the economy is maybe in a tougher position and mortgage rates are going to have to come down a little bit, just obviously for, to help everyone out there.
So you mentioned that there was a lot of optimism in the market. Is this something that's just over there at Fairway Mortgage, you guys are optimistic, or is this something, depending on which news channel you watch?
Yeah.
What do you think is the real basis for this optimism that you referenced?
Our office has been optimistic for 3 years. Every month it feels like we're, it's one more month. And so, but at the same time, it does feel like we've seen a lot of, obviously, we saw in September of this year, we saw rates come down to high 5s, 6%. And then obviously with the election, there was just a lot of uncertainty, a lot of things going on. And so rates jumped up a little bit, obviously. But we've seen them come down lower and really as low as we've seen them in the last 3 years. And so I think that gave us a lot of optimism. I think just where inflation data is at right now, obviously, the Fed wanted inflation to be at around 2%. We're really close to that number, if not at that number at this point. And so realistically, we're not raising rates anymore. They're cutting rates. And so it feels like we're going in the right direction, even though they don't directly, correlate with mortgage rates. They do have a good, it is a good indication of if the Fed is cutting rates, mortgage rates are likely going to follow. They're going to come down as well. But all to say, like, it feels like everything is going in the right direction. Finally, starting with like I said, that rate starting to get cut. We're starting to see like numbers that positively impact mortgage rates to happen more and more. And I think right now, like I said, we're just like, there's a couple things that are just, obviously with, house prices are staying high, which I think is probably causing inflation numbers to even stay a little bit high, which all to say, like, the housing market seems to always go up no matter what, which for homeowners is always a great thing. But I think realistically, I would say that just like all the data we're seeing, it's all positively, slowly but surely, we're seeing positive signs that like rates are going to start to come down because, like I said, unemployment's going up a little bit. All these other numbers are starting to go down a little bit. And like I said, realistically, we're starting to see some just more positive impact numbers that affect mortgage rates.
Obviously, as a real estate professional, you're a mortgage professional. We talk about rates. It's conjecture, right? We don't have a crystal ball. We are trying to view into some sort of crystal ball and try to, extrapolate what our anticipation is going to be. When I was at EXPCon, they had a conversation about what we can expect for the rates coming forward. And they said we're looking like Q2, quarter 2, quarter 3 before we see something measurable. Are you hopeful that we get below 6, anticipating below 6? What are your thoughts on that?
Absolutely. I mean, like I said, I think we touched below 6 where, I was locking some deals around 6%, 5.75, even like I said, August, September of this year. And so it's the closest I felt like we've been in a while to like touching those numbers. And so obviously like that gives a lot of optimism that I think we're going to see something like that soon. I don't think it's going to take a lot. But like I said, I think anytime there's an election year, it feels like it's a little bit of a tornado and like rates come down, then rates go up, and you just never really know. And so I think getting through that is going to help kind of stabilize things a little bit, if you will, and hopefully nothing goes down in a straight line where obviously like we'd love to see things go straight to 5% in a couple of weeks, but I think they'll start to go down. They'll go up a little bit a couple of days, and they'll go down for a week, and they'll go up. And I think we'll start to see, but an overall trend down. And I'm thinking, in my head, we've been talking in our office a lot about like that late summer or late spring, early summer, which like you said that that Q2, like late Q2, maybe early Q3, where we're going to start to see like some real change in rates, and hopefully that happens even quicker. But at the same time, I think you can we should be able to expect that if the Fed keeps cutting rates like they say they're going to, if all the I guess the economy numbers, the inflation numbers, the jobs data comes out and continues to like be positive, I don't think there's any way that we won't see at least a trend down to 6%, high 5s, and hopefully by the end of the year, mid 5s. But like I said, I think this is the first time in a while, I guess, that we touched that place where we're like, hey, we're at 6%. Like I said, I was locking people at high 5s, low 6s for like a month and a half, which was kind of awesome. But I think seeing that and then just seeing, like I said, kind of what's ahead and what we can expect. Obviously, there's plenty of things that can always happen that are unexpected. I mean, obviously, I don't think we're going to have another COVID by any means, but like unexpected things happen all the time. And so, but if things go as expected, I think Q2 is a very good like guess as to when we can start to see like some significant change. So
some big relief there. Yeah, we kind of went over a little bit about some of the activity that's coming out from our weekly market activity report, where we're starting to see a tick up in overall listing inventory. It's not moving with the pendings, right? So we're starting to see an increase in overall inventory. So my conversations that I'm having with buyers today are, yes, you can try to hold out for that really, really great rate. But what's going to happen is everybody's going to try to get in that lifeboat at the same time. And we could be back in that same situation next spring where it's highly competitive. We're going to have 2-3 offers on properties. And so for those buyers who are kind of maybe on the fence or waiting for that rate, do you have a specific conversation that you have with them about, should you wait, or is this worthwhile now? Because as a buyer's agent, when I'm going out showing properties, I'm seeing properties that are on the market for 20, 30, 40, 50, 60 days, right? They don't have an offer. I showed a really amazing listing 2 weeks ago. We did a second tour yesterday, right? So we're weeks waiting for this home to move. We have a lot more flexibility. And I think looking at the percent of original list price, right? So percent of original list price to the close price is 97.8%. So we're talking 2.2% off of list. One of the conversations I like to have with my buyers is, hey, maybe we can do a buy down. Maybe we can get a seller to buy these rates down. So is that something that you incorporate in that conversation with buyers about making that move today?
Yeah, absolutely. And I mean, I think I tell all my buyers right now, because it's true. I mean, this is just the facts that like almost over 90% of my buyers right now that have closed from October to December at this point, and anyone going to still close, obviously it's only like you said, the second or third right now today, I can't remember, but realistically have some sort of seller paid closing costs or temporary buy down in there where, the sellers are giving them $10,000 to either pay for their closing costs or, do a 2-1 buy down or 3-2-1 buy down or whatever it might be, where they're saving 2%, or multiple hundreds or thousands of dollars in the first couple years just on mortgage payment, or obviously if they prefer just like paying for their closing costs essentially. And so that's a huge advantage of just taking it. Almost all of my buyers right now are taking advantage of that, whether it's they're getting that plus a lower list price, or maybe it's just at list price and getting those full seller paid closing costs. But huge advantage right now. And I mean, I've told everyone, like I said, rates are gonna go up and down, but we're gonna see, especially right now, we're gonna see rates come down where you're gonna be able to save a couple $100 a month for most people within the next year, the next 2 years for sure in my head, next year probably, where realistically, if you're at 7% right now, you can get to 6% in 6 months, then like you get the house you love, you get the seller paid closing costs or the temporary buy down or whatever it is, and you can kind of take advantage of that, get better terms, and then like save that money down the road, which I think is sometimes hard to see. But I think for anyone that's taking advantage of it right now, I mean, like I said, anybody that bought a house last winter took advantage of that low month and a half of rates, and like we were telling them the same thing. And whether it's only a month and a half or we see them continue to go down, like we helped a ton of people refinance and save all that money that they were planning on saving at some point. And people on average are saving $150 to $350 a month, depending on the purchase or the loan amount on their house. And so, I mean, that's some serious money. And then obviously, like they get into the house they love, they eventually get to a payment they love, which I mean, obviously, that's the big thing right now is if we get to get the terms and rates are at 5.5%, I don't think anybody would question it at this point. It's like, hey, the only thing stopping them would be the unfortunate cold weather we probably have in the snow. But realistically, like I said, if you're okay moving in the snow, taking advantage of, like I said, the terms that you're able to get, it's like when you get to spring, you're not going up against one offer, you're going up against 10, 15 offers. And so like odds are, like right now, people are going up against 0 offers. So just a huge advantage that you can take right now. But I think it'll probably stay this way through December, and then you just never know at the beginning of the year. I think January, it's always the people who are like, I want to buy a house. It's my New Year's resolution to get into something right now. And I think if you're ready right now, then you can take advantage when everyone else is still getting ready. So
I had just on my active listings that I had, we had a doubling of showings over the weekend. So wow. I kind of on my buyer consult or my seller consults, I'm talking about, where early in the month that we weren't having any showings, like not what you would expect. And then it was like, okay, this is just some sort of like election fever, and maybe that'll pass. And it kind of carried through for the rest of the month. Yeah. And I'm like, hopefully it'll change after Thanksgiving. And we definitely got into that point where this weekend we saw that doubling. And I anticipate that pent up buyer demand is still there. We're still historically low on units. Yeah. And so I do, optimistically do believe going into January, February, that it's probably going to be a record year for sales. And so I'm very optimistic at this point, definitely for my sellers. But right now I'm telling my buyers, hey, let's get on this right now. Let's take advantage of this window. Can you tell me a little, what was the difference between the 3-1 and 2-1 buy down? What are those two? What's the difference specifically?
Yeah. So the 2-1 buy down is really, it's 2 years you get to buy it on your interest rate. Let's say your rate's at 7% as an example. You know, that first year your rate's going to be at 5%, so it's going to be a whole 2% lower, which I think on average saves about $500-$600 a month. And that's for an entire year. That's set. And in that second year, you go from a 5% to a 6%, so still a whole percent lower. Great part about, and then 3-2-1, it basically extends a year and a percent onto it. So like, you know, with the 3-2-1, you technically have to be putting a certain percentage down, at least 10% down. But then you can ask the sellers for, to get to a 3-2-1 buy down, which really will buy it down 3% in the first year, then 2% in the second year, 1% in the last year. And then after that, it goes back to whatever that 7%, that note rate would be. But what I will mention is the great part about that right now too, is that if you were able to refinance in, let's say, a year, you do a 2-1 buy down, all those funds you got, seller paid closing costs, you technically can't, once they pay for the closing costs, it's just, it's paid for, it's done. But with this, technically, the money will sit in an account that like is slowly paid out, as you're essentially, like I said, saving all that money. And if you refinance in a year, you can actually use the remaining money to like help buy, pay down your principal or buy down your interest rate permanently at that point. And so it's money that gets to sit there and you get to use, whether you use it for the full 2 years or 3 years, or whether, you're able to refinance, like the money you still get to get used towards your mortgage one way or the other. And so, if in the second year you can refinance to 6% forever, then like I said, you still get that however much money you have left in that account to pay down your principal or buy it down a little bit to get to like a 5-6 or something like that. So ton of people are taking advantage of that right now. Huge opportunity. And like I said, just a really great deal for buyers out there.
Awesome. Well, this has been a lot of information to digest. I can tell you've obviously had plenty of coffee today. Is this a pot? Are you kind of like, do you drink a pot of coffee, or
maybe
you're just young and you got energy?
Could be. Yeah, of course. Have to. It's cold out, so you got to drink something hot. But
what got you? Just so for people who are watching this video, give me the 1 minute. What brought you into the business? What's your specialty? What do you focus on?
Absolutely. What got me into the business, honestly, when I was 23, which is over 6 years ago now, I met a guy who was in the industry. I was fresh out of college. I was a finance major, and I just I like the idea of helping people do something. I just don't know, in finance, I didn't want to sit at a desk and sit in Excel sheets. And so as fun as that is, I like helping people, and I think that it was always fit my personality a little bit more. And so I've been doing it for like over 6 years now. I work for Fairway Independent Mortgage, obviously, like we talked about. And realistically, I try to what keeps me going is like I said, helping all the people in my life, all the people who I meet, get into this. I like working really hard. I like being available for these people. I like the idea of hey, if you need something on a Saturday, just text me. So because I can be available all the time and I can do things all the time from anywhere. So all this is it's always intrigued me. I like working hard, and I think this job allows me to help people and work hard. So
awesome. Well, thanks for sharing that information there, Brett. Appreciate you coming on the video today. If you got some value from this video, if you could do me a huge favor, if you could just tickle that like button for me. If you're looking to transact here in the near future, and you're in the Twin City Metro Minnesota region, definitely subscribe to the channel. I will link Brett's contact information in the description below. So if you want to get in contact with him or have a one-on-one conversation with him, I'm sure he'd be more than happy to jump on with you. Appreciate it, Brett. Have a great rest of your day, and we'll see you in the next video.
Hey, thanks, Justin. Appreciate it.